Hey everyone, me Kevin here. We just got breaking news that the New York Attorney General and the state of New York have filed a massive real estate fraud lawsuit against Donald Trump and many others. This video is going to be a first look breakdown at some of the allegations and some of the relief sought against Donald Trump, including potentially damages of up to $250 million. So we've got a lot to talk about here, including other requirements that are coming of Donald Trump in the event that this lawsuit were to prevail. Of course, the political spectrum on this is, as usual, heavily divided. This video isn't to give you a political bias. It's for you to just see a first look inside the actual documents. Of course, those on the right say this is just another attempt by a Democratic Attorney General, which the Attorney General is a Democrat. She's the first African-American Attorney General of New York State. And many on the right are making the argument that, well, this is just another opportunity to, right before an election, midterms in this case, and of course right before the 2024 presidential elections, to tarnish the Trump brand. Whereas those on the left are saying, finally, some justice is hopefully potentially getting served. But so far, Donald Trump has been very much like Teflon Don. A lot of charges, a lot of lawsuits, not so much in the way of sticking. Obviously, let's get into this without imparting any opinion, and let's take a look at the actual documents. So here we go. This is what the document looks like. This is the summons. And what I first want you to see is the people who are addressed in this lawsuit. Not only do you have Donald Trump, but you've got Eric Trump, Ivanka Trump. You've got some key members of the Trump organization, Donald Trump's personal trust, his corporation, his LLCs, and multiple other organizations and entities are all being sued in this, including the limited liability companies for properties like 40 Wall Street or the old post office in Washington, D.C., right? These are all assets and entities that are being brought under suit by this complaint. So let's take a look at some of the nature of action, and then we'll get into relief. So I went ahead and read through this, did a little bit of highlighting. So let's see what we can read over here. First, the New York Attorney General alleges that this is the result of a 3-year investigation and interviews with 65 witnesses, at least 65 witnesses, and a review of millions of documents, or millions of pages of documents. They allege that Donald Trump and the Trump organization acted with fraud and misrepresentation. And a lot of this fraud and misrepresentation was allegedly approved or committed by upper management by the Trump organization, again, or approved by the Trump organization, in some cases, even Donald Trump himself. Some of these allegations relate specifically to Donald Trump's desire to allegedly increase his net worth on statements that he then provided to either lenders or financial institutions to show, hey, look, we have properties worth so much money, you can lend us more because we're good for it. We have assets worth a lot of money. And the New York Attorney General alleges that a lot of the documentation, if not all of the documentation that Donald Trump provided to ascertain valuations for his real estate were either purposefully fraudulent or just like totally carelessly deceitful. And so they are essentially alleging that Donald Trump has violated a host of criminal laws, including falsifying business records, falsifying financial statements, going as far as potentially calling this insurance fraud. The initial sort of summary inducement here is that Donald Trump and the Trump organization inflated appraisals for the valuation of properties, not just in 2014 and 15, but also previously 2014 and 15 related directly to conservation easements for a few of Donald Trump's properties. And then we'll get into some of the specific examples. I'll quickly give you an example of how a conservation easement works. The way something like this works is Donald Trump, let's say, has a vacation property, very nice property somewhere, and says, hey, you know what? We use this as a property. We could develop on it if we wanted to. Right now, we've got a house over here in this corner of the land, and all of this is, let's just say, greenery or pastures or whatever. And Donald Trump could, or anybody through a conservation easement, could tell the IRS, hey, you know what? We're going to donate the rights to develop this land because if we wanted to, we could go in here and put in a bunch of apartment complexes and parking lots, and it wouldn't be as pretty, right? we're going to go ahead and donate this land. And the value of the land that we donate is what we'll take as a tax write-off. So, for example, if you say this plot of land is worth $100 million, then you might be able to take a tax write-off in the amount of somewhere around $90 million and not pay taxes on that $90 million. But if that property is not actually worth $100 million and it's only worth $20 million, well, then you're obviously taking a substantially larger tax deduction than you should be eligible for taking, right? That's just an example of one of the allegations here on the conservation easement. But we get into some really interesting items here and some quite interesting specifics. So, for example, nearly every one of the statements represented that were prepared by the Trump Organization, that evaluations like property appraisals were actually completed by outside professionals. But the New York Attorney General alleges that this is actually false and misleading because the reality is, according to the New York Attorney General, remember these are all allegations, no outside professionals were retained to prepare any of the asset valuations in the prepared statements. And to the extent that Mr. Trump and the Trump Organization received any advice from outside professionals that had any bearing on how to value the assets, they routinely ignored or contradicted the advice. And so they give an example here of, wait a minute, you got appraisals for 40 Wall Street, which is a property next to the New York Stock Exchange on Wall Street. Imagine that, on Wall Street. It's right next to the New York Stock Exchange. And they got appraisals that the property was worth $200 million August 1st, 2010, and $220 million as of November 1st, 2012. Yet in 2011, so between these two dates, Donald Trump and the Trump Organization alleged that the property was worth $524 million and increased a few $1 million each year thereafter. That's what the New York Attorney General alleges, more than twice the value that was given by other appraisers. And then they go even on to say that even more egregiously, the valuation of that more than $500 million was attributed to information obtained from the same appraiser who said the property was only worth $200 million. So in other words, it sounds like they potentially, allegedly, hired an outside appraisal or appraiser. The outside appraiser says, oh yeah, we think 40 Wall Street is worth $200 million. And here's our report. And then the Trump Organization looks at the comps, the comparable sales, and says, we like that one, we like that one, we like that one, we don't like that. Oh, our valuation is $500 million. That is the allegation that's being made here, right? That doesn't sound too good, obviously. You know, I'm sure there are two sides to every story, so we'll see what happens. And the rationale for doing this is, according to the New York Attorney General, not just for the purposes of exaggeration or some form of good faith estimate, but it's actually rather being done to purposefully defraud lenders and institutions. And so we'll see more examples of that coming up, especially in regards to Washington, D.C.'s old post office. Here's another example. Mr. Trump's own triplex apartment in Trump Tower was valued at being 30,000 square feet when it was actually only 10,996 square feet. That basically means the property looked on paper like it was almost three times as large as it actually was. As a result, in 2015, the apartment was valued at $227 million, or almost $30,000 a foot. That price was absurd given the fact that at one point, only one apartment in New York City had ever sold for more than $100 million. So in other words, by 2015, only one property in New York had ever sold for more than $100 million. And yet somehow Donald Trump's apartment is worth $327 million is what they're alleging here. And again, they also say that $100 million sale was for a brand new construction property, whereas Donald Trump's is 30 years old. Now, Donald Trump, of course, is going to make the argument that, hey, well, mine's lined with gold. And we do know that he likes gold. Although other people make the argument and say things like, that's not gold, that's polished brass, which is what you see on cruise ships. When you see like gold handrails, they're polished brass. And if you go into the lobby of Trump Tower, a lot of things look gold, but they're brass. And that's and you could tell because gold doesn't tarnish, brass does. Anyway, we were not going to get into that. Mar-a-Lago apparently was valued as high as $739 million. That's almost $1 billion for the Mar-a-Lago club. And the Attorney General alleges that this was based on the false premise that this was unrestricted property that could be developed. And Donald Trump does this in other instances as well, allegedly, where Donald Trump suggests that, hey, well, this property is going to be worth a lot more if we develop it. Well, apparently, Donald Trump from Mar-a-Lago himself signed deeds denoting his residential development rights and sharply restricting changes to the property. And in reality, the club generated annual revenues of less than $25 million and should have been valued closer to $75 million. That is a 10x overstatement of value of Mar-a-Lago, potentially and allegedly, right? When we look at Scotland, the golf course that the Trump organization has in Scotland, the valuation assumes, so the value they gave the property, the golf course in Scotland, assumes that, hey, well, this land is so valuable because we're able to develop 2,500 homes here. And the Trump organization ended up obtaining approval for only 1,500 cottages and apartments, which could be deemed as smaller than homes, although this could be an issue of semantics here. And so the valuation the Trump organization stuck with, though, was $267 million of value for 2,500 homes, even though the permit allegedly they got was only for 1,500 homes. And so this created a valuation boost of $267 million for these 2,500 homes when the actual permit they got isn't even close to that. It's 1,500, which is 1,000 less. It's like more than a third less, right? And so the Attorney General here argues that it's not okay to essentially use irrelevant or inaccurate valuations to prop up your net worth. And they give further examples like here. For example, a series of high-value properties estimated the profits from developing and selling homes without accounting for the years it would take to plan, build, and sell the homes, and instead operated under the impossible and thus false premise that homes could be planned, built, and sold instantaneously. Okay, so this is interesting because really they're making the argument here that, hey, you're valuing this as if the 2,500 homes are built, but it's going to take you 3 or 4 years to actually build 2,400 homes. That's going to create opportunity costs, costs of your capital like interest, planning costs, and also what's known as, you generally do what's called a discounted cash flow to account for the opportunity cost, to say that, hey, well, every year that goes by, thanks to your opportunity cost, you're actually losing about 8% on that investment or whatever your discounted cash flow model assumes. That's more of just like finance jargon. Basically, the Attorney General is saying, this is ridiculous. Like, the homes aren't built, but you're assuming they are. That's basically what they're saying. So they also then move on to Jupiter, Florida, and they suggest that Jupiter, Florida had an inappropriate evaluation approach because what the Trump organization allegedly did was the Trump organization bought this club for $5 million in 2012. Yet the very next year claimed that the $5 million property was actually worth more than $62 million. And the reason for that was because they said, well, we collected membership fees of about $41 million. So they're kind of like, well, we paid $5 for it. We got $41 million in membership liabilities, which means you actually have to provide services for those people, whether it's food or amenities or whatever, right? You don't get that for free. And so basically the allegation here is that Trump said, hey, well, $41 million plus $5 million plus about 30% for the Trump brand. Yep. Sounds like $62 million to me. And so really this lawsuit just over and over and over again tries to show that over and over and over again, Donald Trump is basically going, hey, we think it's worth this and that's good enough, which obviously we might think to ourselves like, okay, like, well, what harm is that there in that? Well, stay tuned and they'll give an example. There's some other examples here, though, of using cap rates that are really, really low. So cap rates are really, really important in real estate because let's say you have a property that generates $100,000 of net operating income, right? NOI. So let's go draw that out just to show you. So if you have a property that generates $100,000 of NOI, if you divided that by, let's say, a cap rate of 2%, the property at a 2% cap might be worth about $5 million, just to give you an example, right? Now, if you took that $100,000 NOI and assumed a more realistic cap rate of, let's say, 5%, well, excuse me, I'm doing this a little backwards here. So if the net operating income is $100,000 and you're going with the 2 cap, the valuation is very, very high. Let me explain it that way. The valuation is very, very high. There we go. No, I'm doing it right. Okay, if the net operating income is $100,000, so the same net operating income, and your cap rates in the market are 5%, that means the market is demanding. This is the part that's missing. The market is demanding 2% in this example, or the market's actually demanding 5%, well, then the valuation has to go down to achieve that yield. So if we go with a 5% cap rate in that market, the valuation of that property would actually only be $2 million. So this is kind of like an inverse way that you could determine a valuation for a property. This number, the cap rate, is what the market demands as a rate of return, and therefore your valuation is dictated by that cap rate. So that's a little bit of background there. And the reason that's important is because right here, they say capitalization rates were derived by cherry picking an unsupported figure from or averaging the lowest 2 or 3 cap rates listed in generic marketing reports and ignoring rates in the same reports for buildings that were closer or more comparable to Trump Tower. So they just give another example here of, like, by using a low cap rate and comps that don't make sense, you're just inflating the value of your properties inappropriately, right? You're also potentially considering cash as 100% your own in some circumstances when there are actually partnerships in the extent of 30 to 50% partnerships that have rights to some of that cash. So those are just some examples here. Now, the allegation that the New York Attorney General says is that the statements that Donald Trump used to prop up his net worth are misleading and fraudulent, and because they're misleading and fraudulent, it's actually not fair, and it's defrauding lenders like Deutsche Bank for $125 million loans or whatever, because well, let me rephrase this. The New York Attorney General is alleging you can't use fraudulent documents to get big loans from banks because you're actually misleading those banks and you're letting them get into more risk than they actually think they're getting into. Because if Deutsche Bank is like, oh, well, you're worth $1 billion, let me lend you $125 million, maybe that's a risk they're willing to take. But if you're actually only worth $80 million and you're getting a loan for 125, Deutsche Bank will probably be like, yeah, we're not lending you 125, right? The interesting thing here is I don't necessarily see how Deutsche Bank was clearly damaged, but I imagine those allegations will come out in the future, especially since you have quotes like this circulating now that, quote, Deutsche Bank has been cooperating with this office. In terms of cooperating with the New York Attorney General, right? So these are some of the things that we see circulating on this. So it's like, okay, well, can Deutsche Bank allege any kind of damage from these loans? And the argument might be that, well, no, maybe if Donald Trump paid all of his loans on time or whatever, then what damage was there? And that could potentially mitigate some of these fraud claims. Not saying it's not wrong to potentially misrepresent or allegedly conduct fraud, but it could potentially weaken the AG's argument. And so this is where the New York Attorney General says a lot of Donald Trump's success was actually related to the misstatement of these financial documents. Because, for example, when you go over here and you look at the deal that Donald Trump did to purchase the Washington, D.C. old post office, they actually say that one of the reasons Donald Trump won was because during this competitive selection process was because of the financial wherewithal of the Trump organization through their statement of financial condition. This record-breaking sale of then later the Trump International Hotel benefited the Trump organization to the tune of more than $100 million in May of 2022. And so they make this argument that, oh, well, you are actually profiting off of the fraud that you're conducting. And now we are suing you for the fraud that you're conducting because you are making money off of that. You're deceiving people and therefore making money off of that. Those are the allegations. So now we're going to get into a really interesting part of the lawsuit. An interesting part of the lawsuit here is that, wait a minute, what kind of relief are they looking for, right? So let's go ahead and jump on over to the relief that the Attorney General is seeking. So first of all, the Attorney General refers to a specific penal code, which is the New York Executive Law 6312. And in it, they mention that the court may award relief as much as it deems proper if there is deemed to be any kind of deception, misrepresentation, concealment, suppression, false pretense, or otherwise. And so what's fascinating is here, you are going to get the relief sections. And this is where things actually get interesting. Now, obviously, Trump has not been found guilty in this lawsuit. This lawsuit is just the beginning of the lawsuit. So we have no idea what could potentially happen, right? But take a look at the relief that's being sought. Number one, appointing an independent monitor to oversee compliance, financial reporting, valuations, disclosures to lenders, insurers, government authorities at the Trump Organization for no less than 5 years. And this presumably would have to be paid for by Donald Trump. So it's interesting. They're basically demanding here that an auditor follow Donald Trump around for 5 years. Beyond that, Donald Trump's trust would have to have an independent trustee who could make decisions on behalf of Donald Trump's trust. Donald Trump would be required to show an audited by an independent auditing firm statement of financial condition and prepare those subject to GAAP audits for the next 5 years, showing Donald Trump's personal net worth. So in other words, for the next 5 years, an auditor follows Donald Trump around and regularly reports what Donald Trump's net worth actually is in the independent opinion of that auditing firm. Also, this lawsuit seeks to bar Donald Trump and the Trump Organization from entering into any New York State commercial real estate purchase for a period of 5 years. They're basically trying to ban him from owning or buying new real estate in New York State for 5 years. They're also trying to ban Donald Trump from borrowing any money that is registered with the New York Department of Financial Services. That's a big thing because if you're now I don't know banking that well, but I'm curious, like, are national banks registered also with the New York Department of Financial Services in addition to their national charters? It's kind of interesting. That could be something we could probably look up pretty easily, but it's not so worth doing right now because it's just the beginning of these allegations in this lawsuit. The next allegation, relief sought is the Attorney General is seeking to permanently bar Donald Trump Jr., Ivanka Trump, Eric Trump from serving as an officer or director in any New York corporation or similar business entity registered or licensed in New York State. Remember, a lot of companies don't have to be based out of New York, but they could be licensed in New York. Same for some of the other executives. Look at this one. Awarding disgorgement of all financial benefits obtained by each defendant from the fraudulent scheme, including all financial benefits from lenders and insurance through repeated and persistent fraudulent practices of an amount to be determined at trial, but estimated to be $250 million plus interest and any relief deemed appropriate by the court. This is huge. This is a really damning relief seeking or relief piece here in terms of what they're looking for. Now, this lawsuit goes on quite deeply and alleges all of the properties here. It lists all of the properties that are involved, and it goes into substantially more detail. This document, this PDF here, is 226 pages long. If I just quickly scroll over here to page, I just randomly picked this, okay? I'm on page 166 of the PDF. In response to those concerns, Deutsche Bank personnel in Feb 2012 submitted a new credit memo to alter the terms of the prior credit memo. As a result of those changes, one tranche loan amounting to $19 million became an unsecured personal loan. And so the entire rest of the documents go so deep into the actual nuances of the details that are in this case. Now, if you want a copy of this lawsuit, what I'm going to do is I'm going to create a link of this so that way you have a link of this. And I don't have it up yet, but I want to do some questions. I want to see if I can put this on my link tree. So that way you can go to metkevin.com/links and you should be able to see it there. So I don't have that up yet. I'm going to answer some questions while I try to do that. But that'll be up by the time, if you're watching this on replay, it should be up there. And if you're not watching this on replay, you're watching this live, then just stand by for about 5 minutes and I'll get that link up for you. Let's go ahead and do a few questions. We do have the Federal Reserve meeting coming up very, very soon here in about 15 minutes is when we're going to start streaming that. So I'm excited for that. Let's go ahead and take a look. Let's see here. There's no way to prove or get anywhere close to this. Well, it's an interesting comment there. I think the entire 226 pages would probably make the argument otherwise. But, the thing with lawsuits is what ends up happening is you end up going through years of discovery for this. And in a lawsuit, the goal becomes, how can every claim be proved with attached proof, basically, right? Like, that's the point of a lawsuit. You make your allegations with the proof that you have and the investigations that you have, and then you try to get more of that information or more insight through the actual legal proceeding and legal process. That could include testimony from companies like Deutsche Bank. And if Deutsche Bank is like, look, we did due diligence. I saw some comments on people saying, well, Deutsche Bank should have done more due diligence. Well, what if they did? What if Deutsche Bank is like, we did due diligence and, we were provided financial statements that were fraudulent? And what is Deutsche Bank supposed to do in that case? So I don't know. It's interesting to me, and we'll see what ends up happening. But the discovery for this case is going to be huge. I mean, this case is going to take years to go through. I mean, honestly, it could be that Trump ends up running for president, winning, and finishes term before this case ends up ending, because you could sometimes see these cases take a decade. Honestly, it's remarkable how long cases like this can take, because there is just so much detail to go through. It'd be like lying on your taxes. Yeah, that's a good point. Let's see what other kind of questions we have. If I go to the bank and say my house is worth 50 million and I want to take out an equity line of credit, and the bank doesn't do work to confirm the home is worth that much, that's on them. That's possibly true, but I actually like the analogy that somebody else gave here, where they say, hey, if you file taxes, and let's just say you make $50 million a year, right? And your argument is, oh, well, I make $50 million a year, I can afford anything. And you actually file taxes to that effect. And then when you file taxes to that effect, you take a massive write-off on taxes, so you don't actually have to pay taxes on that because of conservation easements. So now you're paying no taxes, but you're artificially inflating your income. That's tough, because now the bank is potentially relying on tax returns that are inaccurate, right? So kind of interesting. No guarantees, obviously, but these are things that are going to be evaluated in the course of this lawsuit. So let's see what else here. Some people saying it's a garbage lawsuit. Then it's the IRS's fault for not checking. That's entirely possible. True. Yeah, look, it's interesting. I'm not here to take sides. I always like to look at kind of what some of the allegations are and take it from there. And so I think we've done that. What I'm going to do is I'm going to go through more of a deep dive on this. I'm very interested in going through a little bit more of a deep dive. I'm going to go ahead and put that link up on Linktree as soon as I have it available. It's going to take me a few minutes longer than I thought, because I thought their linking system would be a little easier, but it's going to take me a few more minutes. So give it about 5 minutes, and if you refresh in about 5 minutes at metkevin.com/links, you'll be able to see the PDF document of this case with my annotations already on it. All right, folks, see you at the FOMC meeting in about 10 minutes. Thanks so much. Goodbye.